Thanks for stopping by, everyone. My name is Jeff. So in tonight's video, guys, what I want to talk about is 3 stocks I feel you might want to buy or you might want to own and continue investing in if you are concerned we are on the heels of another economic recession, or if you feel maybe we are 6 months, a year, 18 months away. You know, obviously nobody is going to predict this exactly right, and for all we know, we might not have a recession coming. I've really been hearing the echoes of a recession and all of these predictions really going back to 2012, and here we are 7 years later and a recession hasn't happened. So I'm very mixed on that subject. This is another reason why I'm so big and passionate about short sales and buying and selling put options, okay? If you look at things from a short seller's point of view or a person that trades a lot of put options, you know, a recession could really possibly be a dream come true. It could be your golden ticket to riches. If you've never seen the movie The Big Short, I highly suggest watching it, guys. I think it's on Netflix. Pretty easy to find. You might even find it here for free on YouTube. So let me clarify, short selling and put options is not the majority of my trading. I would say 75% of the trades I make is long-term investing, but always try to keep some leverage in anticipation of bad companies trading down and of course the markets taking natural corrections. Believe it or not, we have been in a bull market for over 10 years now. So if you want to look at things historically, the threat of a recession and the odds of a recession happening are very, very high, being that we've been in a bull market for 10 years. So let's talk about 3 stocks I feel will perform very, very well if a recession was to happen. So make sure to drop a thumbs up on this video, guys. I appreciate all the support, and make sure to subscribe to the channel if you have not done so already. So I'm sure with a lot of you, your minds probably immediately went to a discount retailer. Which discount retailer performed the best during the 2008 recession? I know a lot of people would probably choose Walmart, Target, maybe Costco, Kroger, Dollar General, because those companies provide the day-to-day items that we need. We simply have to continue shopping at these stores and buying consumer products, because when a recession happens, we really start figuring out the difference between a need and a want. And our money will go to our needs. Just consider yourself, whatever income bracket you are in, you are most likely to drop off a little bit. So it might come as a surprise, the best retailer performance-wise in the stock market during the 2008 recession was Dollar Tree. And guys, I really feel like this company is positioned to do that once again. This is a fantastic company, has run outstanding since their IPO. Dollar Tree grew almost 200% during the 2008 recession. I feel like if you do not own this company yet, it might be very wise to start investing in Dollar Tree the next time their company stock takes a dip. So what I've got pulled up here is the max charting on Dollar Tree, and I've zoomed in on the years 2006 all the way out to 2010. Now, immediately, guys, you do see this big dip here, right here where I have my marker, but the date on it is December of 2007, and looks like it lasts till about March of 2008. Well, the economic recession actually went into full swing around July to August of 2008. By that time, Dollar Tree was trading at $12 a share and actually holding its levels very, very strong. As I mentioned here just a minute ago, if you want to go off some of these lows from December, Dollar Tree was roughly a $7 to $8 per share stock. Very, very affordable. Now let's fast forward 2 years past the recession. I have September 20th of 2010 marked right here, guys. Dollar Tree is a $25 per share stock that has seen very, very little volatility, held an outstanding balance sheet, grew exponentially, and even paid a strong dividend, and really, guys, outperformed nearly every retailer out there. I spent about 30 minutes looking for this article, guys. This is an article from 2009. I will have this down in the comment section. It will be pinned if you want to go back and read it yourself. And what it really talks about is how Dollar Tree just seems to have a knack for good timing. And what it really talks about is how Dollar Tree has all of their items and inventory priced down so low already that making small price adjustments can give them a very, very big advantage when you compare them to the retail giants like your Walmart, your Target, Costco, and so on, many others. Let's just say your income goes from $70,000 a year down to $30,000 a year, which was very, very common. This was happening a lot during that time period. You would find yourself, maybe people in your family are going to start shopping at the Dollar Tree far more often. So basically during that time, it did appear that the middle class was disappearing, is that most people in the middle class were going down into the poor range. And that's really kind of the phenomena that happened with Dollar Tree. It just boosted their sales and they kept on expanding, and they were having massive success on their quarterly earnings reports. So I would say Dollar Tree would be one of the absolute best stocks, not only to own, but to continue investing in if a recession was to happen. You'll probably take your biggest beatings on your tech positions. So this second stock I would consider owning and investing in during a recession, guys. This seems super obvious to me. Is ticker symbol WM, and I'm talking about Waste Management. Now, for very, very obvious reasons. This is a utility type company, okay, and they offer a service to dispose of trash. This kind of company offering this type of service, it's not going anywhere ever. As long as human beings are eating food, buying clothes, taking their kids back and forth to school, and pretty much doing anything, guess what we all do and will never stop doing? We make a lot of trash. And so good economy, bad economy really makes no difference here, guys. Waste Management is going to continue to thrive and grow in the midst of pretty much any economic situation. I actually have the last 17 years of charting pulled up on Waste Management, and you will see it did take a little dip at the end of 2008 and start of 2009, but if you look at the big picture, it doesn't really stand out. And this company did not suffer, nor did they have a hard time adjusting to a recession. You know, it's one of those things, like I said, it'll probably slide by most people. You're not going to think about it. It's not one of those companies that just jumps out, but it's one of those companies you do want to own. Pay such a strong dividend. They've had so many years of boosting that dividend. Now, I will mention that you did see a lot of dividend growth not only stop during the '08 recession, but you even seen a lot of really, really good successful companies reducing the amount of dividends they paid, where you don't really see much of that. I haven't seen much of that over the past 7-8 years. You know, one quick that comes to mind is General Electric. But again, that really has nothing to do with the economic situation. That has more to do with mismanagement. And those conglomerate type companies, they're very hard to understand. They're very hard. Sometimes it's very difficult to understand where their revenues are coming from, how they're paying for everything. And sometimes those types of companies just become kind of a jumbled mess on a balance sheet. But Waste Management, this might be the very first stock you would want to try and own. All right, so last but not least, guys, my favorite gold mining ETF, ticker symbol GDX, and that's the VanEck Vectors Gold Miners ETF. Now, I've spoke about this in many videos before, but I think it's very important to reiterate this. In 2008, you did not see the huge, massive spike in some of the commodities that you thought you would have, but you did see oil stocks go up and hit all-time highs. The price of oil shot up to all-time highs, and really that's just where supply and demand came into the picture, is that there was still so much demand for oil and gas, but our supply was neck down. Therefore, the price of oil skyrocketed, and I find it ironic that George W. Bush was our president during that time period. So now I know I have a lot of commodity traders that do subscribe to this channel. Here's the reason you always want to hold gold, guys. In theory, okay, so this is completely theoretical. When the value of the dollar drops and the value of digital assets and equities drop, the value of gold is supposed to increase. That is all theoretical. Now, if you want me to try and explain this past year, the huge move up in gold and silver, I really have no explanation for you, other than it's just a good example of why you should always have some gold and silver in your portfolio. You never really know when it's going to start trading up and trading back down. So I've got the charting pulled up on GDX going back to 2007. GDX really did not see some of its highs until 2010 and 2011. That was safely 2 to 3 years removed from the big economic recession of 2008. Since that time has lost quite a bit of value. And even here in November of 2015, GDX was trading around $12 and $13 per share. So it would have been a really good time to load up. And I still feel at this current price of $28, this ETF is still very undervalued. Just a couple weeks ago, the Dow Jones Industrial Average was over 27,300 points. And actually, it looks like we're making another run again. We're only about 500 or 600 points off from making another all-time high. GDX is up 61% this year. I have videos going back to last October where I was saying, you know, load your portfolio up with GDX if you're afraid of a recession. Even if you're not, these type of commodity ETFs will grow in value over time. And this one has traded itself over $30 a share at one point and now has taken a step back, okay, as some of the commodities have traded themselves back down. I know Friday we had a really volatile day with commodities, but the stock market was strong. I guess the real key is, guys, try to have your hand in everything, okay? Try to have your hand in retail. I think it's a good idea to try to own a lot of tech stocks, try to own a lot of value plays, a lot of utilities, gold and silver, oil stocks, cryptocurrency. The more stuff you own, and if you try to buy, you know, the premium level stuff when it's trading down into lows, you know, most of the time you will see a recovery in pretty much all of these sectors. All right, guys, that's all I got for the video. Make sure to go down to the comment section and mention some stocks and ETFs that you think would be good to own during a recession. I would really love to hear all those comments, and I try to keep a very, very open mind when it comes to this subject. So thank you as always for watching the video, and have a great day.